Hello, my name is Brehon and I'd like to welcome you back to the channel, where not only do we talk about great stocks, but we also talk about great books. Listen, family, I wanted to just talk very briefly about the SPY, the S&P 500, which tracks the top, which is a ETF fund comprised of the top 500 publicly traded companies. Now, some of you may not be aware of this, but 60 to 75% of all trading is done by algorithms. It's done by computers. So, you know, a lot of the movement we can get ahead of based on a basic understanding of the charts. And when you take a look at the SPY, it can give you an insight on how the market's going to move, and could we expect more green days ahead, or if we could expect more red days ahead. All right. And one of the easier ways to do it is by pulling up the daily chart and taking a look at the daily candles using the 20-day moving average. All right. Again, if you've been following this channel, you know how I feel about the 20-day moving average. Stocks, ETFs, they never move too far away from the 20-day moving average. It's like the rubber band effect. They move away, then they snap back. All right. And it's the same thing with the SPY, the S&P 500. And it's the same thing with these computers. So I don't know if you guys ever sit there and watched, if you had for example, when I have Thinkorswim open, I may have 6 or 7 or 8 stocks that I'm taking a look at. And I've seen this happen, different stocks, different industries at 9:30. And they all sell off and they all drop, by 2-3%, maybe 5%, depending on the type of a stock and the amount of liquidity in that stock. And a lot of times that's driven by computers. So once the S&P 500, once it gets oversold, there's automatically a sell-off. And so if you jump into a stock when the overall market is oversold, there's a great potential that you can lose money. Right? You can jump into a stock, it could be green. It could, the stock, your individual stock could be performing well. It could be green. Then all of a sudden, boom, out of nowhere, it drops 5% or 10%. And then you're scratching your head. Why? I paid attention. The charts look great. So it was a great decision I made to jump in, but it still yielded negative results. All right. And the way we want to get ahead of that is we want to take a look at the SPY, the S&P 500, every day. Before we make a decision to jump into another stock, let's pull up the S&P 500. Let's get a gauge for how the overall market is performing. Because if the market is performing well, there is always going to be a pullback. These pullbacks are inevitable. And you can take a look at the S&P 500. And again, the S&P 500 is one of the best ETFs you can buy. Actually, to be successful in just long-term investing, you can just buy the S&P 500 ETF and just ride. Just let this thing ride, because again, ultimately it's designed to only go up. All right. This stock market is designed to make money and to win over the long haul. But when you take a look at the S&P 500, it never moves too far away from the 20-day moving average. We might have a nice run up, but we're going to drop back. All right, drop below. We fell below the 20-day moving average back in September. Then we bounced above the 20, moved up. Again, once we move too far away, sell off. All right, move too far away, then we have some red days, sideways trading, a little bit of decline, and then we're going to ramp this thing back up. All right, so when you take a look at the past 5 days, you can clearly see we were trending down. This green hammer is a large hammer candle. All right, so a hammer candle, again, is the sign that there's a potential reversal in pattern. if the following candle closes or is trading above this hammer candle. All right, so we did get trading above the hammer candle. So this is an opportunity that we may want to jump into this play here. All right, so again, you don't need a lot of charts. If you know how to understand these candlesticks, you can really be profitable and you can win more trades when you understand these candles. All right. All right, so also we have the MACD here. You can see that we have momentum coming back into the S&P, back into the movement. Nice upward move. We had the crossover on an oscillator on March 11th, and we have more strong momentum coming into the stock. All right, now yesterday we, 2 days ago, we closed at 396. The following day, we opened up, we gapped up at 397, but we had a slight pullback. All right. And again, oftentimes when we get too far away, we may have a pullback. All right. So these things are inevitable. The times you want to get into S&P 500 or a nice stock is once it crosses above the 20-day moving average. That's when you want to jump in. You want to jump in and ride this baby up. When it crosses over the 20-day moving average, when it closes above, when it opens and closes above the 20, that's when we want to jump in. We want to jump in and always ride the waves up. All right, all we want to do is win. All right, we don't want to buy stocks when they're on a downtrend. We want to buy stocks when there is a clear upward trend and there is more room to run. All right, now, if you have 4 or 5 good strong days, we may have some settling out. So those are the things that you have to pay attention to. All right, now I just wanted to get that out of the way. Now I want to talk about ZOM. All right, now I know I've traded this stock quite a few times, and I do have a position in this company, so I'm trying to wait to see how things play out. We did have some momentum coming back into the stock on March 8th. Nice momentum. The stock was trending up, but remember, the SPY sold off yesterday. Majority of the company sold off yesterday again because remember, it's all computer generated. All right, the retail investors, they can't make the market move like the big boys, the people that has trillions of dollars of liquidity in the market. All right, those are the ones that's driving the market, and it's all driven by computers. So those are the things you got to be aware of. All right, so today we can see that pre-market we're at 202. So hopefully, once the SPY opens, we can see here that it's 394.84. So we still have potential for a reversal in pattern today, or we may have a couple of days of sideways trading. Let's just wait and see how things go. But we do have momentum coming back in the stock because people have been buying the stock. But again, we had a huge sell-off. Now, let's wait to see how things open up. All right, now it's already at $2 a share. So there is a possibility that we could come back down below the 20-day moving average. Now, the 20-day moving average is at $2.07. All right, I can't see it falling from a high of 270 all the way below $2 and staying there today. All right, so hopefully some liquidity will start coming back into the stock, and we will have some strong upward movement. We'll keep the momentum flowing in. We'll have a crossover on the oscillator, and hopefully we can begin trending up. I think ZOM is still at a buy stage as long as we close the day above this 20-day moving average. Now, if we open below, stay below the 20-day moving average, we may have more red days ahead. But if we could somehow fight to get above the 20-day moving average, which is $2.07 a day, quite naturally, I'm thinking that we may have 1 or 2 green days left in us for this week. All right, so that's all I have for today. All right, be careful with ZOM. You could buy today, but we may have more dip. So again, we want to wait and see how the day ends. We want the day to end above the 20-day moving average candle. All right, now hope I gave you guys a little bit of value. Hope I gave you guys a little bit of insight. Now, if I did, hey, please do a like, hit the subscribe button, keep coming back for more wealth building information. Peace.